on the station that's on your side. This is Channel 7 News Good Morning Arkansas.
Welcome back into Good Morning Arkansas, everyone. Now, with most of us spending a pretty significant time at home over the past year, many of us have had a lot of time to really assess our living situation. Now, this, coupled with historically low interest rates, has actually increased the number of first-time home buyers. Buying a home for the first time can seem overwhelming, but it's also very exciting. We're joined by Jacob Rice, loan officer at the Bank of Little Rock Mortgage, who's here to help explain the process and maybe debunk a few mortgage myths for those first-time home buyers. So, Jacob, thanks for joining us. Many believe that a potential home buyer should make a down payment of a whole 20% of the home's value, and that could be a pretty substantial amount of money. Is this a fact or is this a myth?
That's a big myth, Victoria. Thank you for having me this morning. That is a big myth. 20% is a common assessment we get from buyers, but in reality, usually it's much lower for a first-time buyer. We're seeing typically, on average, about a 6% down payments made, and there's a lot of different good programs that buyers can use to facilitate different mortgages with less money down or no money down. There's a rural home development loan that does require no money down. You do need to have a 640 credit score or better. There's also eligibility requirements for where the property needs to be. Some other good options would be a VA loan. So eligible current active military and or retired veterans do have this zero down VA loan program option. And there's actually no designated credit score requirement for that. So there's a couple of other good 3% down programs. The Fannie Mae Home Ready program does allow for boarder income and rental income to be a factor. So if you're living with other people, that can be a factor. And of course, FHA is a 3.5% down payment requirement. So there's some good options there. The key really is to determining what best fits your needs. What do you have for resources in your budget as far as a down payment? What fits your financial picture the best? And to speak with a professional about it and see what's the best picture for you financially.
Absolutely. Something you mentioned a lot, Jacob, was credit score, and you mentioned having certain requirements for certain loan options. Many first-time home buyers think that they have to have perfect credit, right? With scores in the 700s to 800s to qualify to buy for a home. But is this really accurate?
That's another big myth, certainly. So having stronger credit does allow you to possibly get into maybe a better interest rate loan or open some other options up. But the score is based on a number of factors, whether it's repayment on, credit, if you've got repayment of credit, your history that you've had, the debt income of what you borrowed. So those ranges, the scores can range from 3 to 800 plus. But it's a common misperception that you need to have high scores to qualify. Generally speaking, a borrower needs to have about a 640 credit score or higher. With debt to income ratios, no more than about 50% of your gross income, and some steady income and funds for down payment and closing costs. So certainly a higher score can help, but some of these loan programs do offer financing for borrowers with scores, at 620 and even lower, depending on the circumstances.
Jacob, with these low interest rates and the opportunity to get into their first home, many prospective home buyers, they think that the most important thing to do first is start looking at homes, then apply for mortgage. Is that the order they should be going in?
Quite the opposite, I'd say. In fact, we as lenders and the real estate agents involved actually would much prefer you look at a pre-qualification first, for a various number of reasons. One is it really lets you know what you can afford, your budget, your resources that you're going to use to buy the house. It lets sellers know and your realtor know that you have done this work and know what you can afford and what houses they can show you. You might be looking at houses over your budget, or you might be surprised and find out that you could afford a house that's a little bit more than what you had in mind. So, it's a competitive market. You have, sellers taking multiple offers. So if you come in with a pre-qual letter showing that you've had this upfront conversation, it goes a long way with your offer and with the real estate agents working with you.
Absolutely. Jacob, if a potential first-time home buyer wants to learn more, where can they find more information from you guys?
Oh gosh, please call us. Phone conversations are great. We love having these conversations. Again, on the front end, it helps us with our workload and helps them find out more information faster. But best way to call us is 501-219-9100. Our website is blrmortgage.com. And you can find a lot of information and resources there as well, such as budget calculators and stuff like that.
All right, Jacob Rice, thanks so much for coming on and sharing your time with us today. Good luck to any potential first-time home buyers out there. And we'll have more Good Morning Arkansas after this break.
Thank you, Victoria. It's a pleasure.